In Lesson 3, we will discuss some of the identifiable intangible assets acquired, such as defensive assets and in-process research and development. The following is the definition of a defensive intangible assets from FASB codification. An acquired intangible assets in a situation in which an entity does not intend to actively use the assets, but intends to hold, lock up the assets to prevent others from obtaining access to the asset. To protect its competitive position or for any other reasons, the acquirer may intend not to use an acquired non-financial assets actively, or it may not intend to use the assets according to its highest and best use. Let's discuss the following example. On January 1 of 2018, Company P acquired 100% of Company S that sells product Y that competes with one of Company P's existing products, product X. Company P plans to discontinue the sale of product Y within next year, but will maintain the rights to the trade name to prevent a competitor from using it. The fair value of the trade name on the acquisition date is $500,000. Because Company P is planning to actively use the trade name for only 1 year, the specific fair value of the trade name to Company P is only $100,000. The fourth question is, was the trade name a defensive intangible asset or not? After discontinuing the production of product Y, Company P existing product is expected to experience an increase in market share because Company P does not intend to actively use the acquired trade name, but intends to hold the rights to the trade name to prevent others from using it. The trade name meets the definition of a defensive intangible asset. The second question is, at what amount the trade name should be recognized on the acquisition date? Should we recognize the trade name at its acquisition date fair value of $500,000 or its specific fair value to Company P of only $100,000? The fair value of a defensive intangible asset is measured assuming its highest and best used by market participant, both on the acquisition date and for the purposes of subsequent impairment. Thus, the trade name is classified as a defensive intangible asset and recognized at $500,000 on a business combination date. Let's see an example of a defensive intangible asset from real financial statements of In-Phase Energy Company. On August 9th of 2018, In-Phase Energy acquired SunPower's microinverter business. The transaction was accounted for as a business combination. The total fair value of the consideration transferred was $57.3 million, and it consists of $25 million in cash and approximately $32 million in shares of common stock. The $36 million of the fair value of the consideration transferred was allocated to intangible assets and $21 million to goodwill. As it is written in the financial statements, the company does not intend to actively use the developed technology acquired from SunPower, but does plan to hold the developed technology to prevent other potential competitors from obtaining access to the technology. Therefore, the company will account for the developed technology as a defensive intangible asset. Thus, the developed technology was recognized at its acquisition date fair value of $13 million, even though the company does not intend to actively use it. Now, let's discuss another intangible asset, in-process research and development. Incomplete research and development projects acquired in a business combination are recognized as intangible assets and are referred to as in-process research and development. Let's take a look at the real financial statements of Teva Company. In May of 2015, Teva Company paid $3.3 billion to acquire Auspex Company. Out of a total of the acquisition price of $3.3 billion, $3.15 billion was recognized as in-process R&D. So basically, almost the entire purchase price was recognized as in-process R&D. But we can see from the balance sheet of our specs company that in-process R&D assets were not even reported by our specs company, since all of the research and development costs were expensed as incurred and nothing was capitalized. Exactly as all other assets acquired in a business combination, in-process R&D asset is recognized at its acquisition date fair value. It is initially classified as indefinite useful life intangible assets until the completion or abandonment of the associated research and development project. Indefinite useful life assets are not amortized but tested for impairment. Only after the completion of the project, the useful life of the assets is determined. If the research and development project is abandoned and the in-process R&D assets has no future alternative use, the in-process R&D assets is written off and a loss is recognized.